CompXM 2025 to 2026 Round 1 Guide. Hello everyone, and welcome to this comprehensive CompXM. In this video, I'll walk you through the Round 1 strategy for the CompXM exam, a fast-paced, focused version of the capstone and foundation simulations. The goal is to help you score high, potentially over 950 or even 999 out of 1,000, using a structured and effective plan from the very first round. Let's begin. Understanding the CompXM structure. The CompXM exam consists of 4 rounds, and unlike the regular capstone game, it's quicker and more constrained. You only have 4 rounds, for initial products, and limited time, usually 4 hours total to complete the full simulation. Each decision matters more, and there's very little room for error. You must plan with long-term strategy in mind from round 1. Initial setup, product segments and strategy. When you start the exam, you'll see 4 existing products, already placed in the 4 major segments. The product names and segments vary, but let's say we have ELLN Traditional Segment, UPPR Core Segment, GAPP Nano Segment, IPRO Elite Segment. The first tip here is, warning: know exactly which product belongs to which segment. If you confuse them, you'll make the wrong decisions and are end up winking and laughing, marketing, or pricing. So take a minute to open the Industry Conditions Report and map each product to its corresponding segment. Strategic move: add 4 new products in round 1. Here comes a key strategy: add 4 new products immediately in round 1. Why? CompXM only has 4 rounds. Developing a product takes 1.5 years, so if you don't start now, your new products won't be ready in time to sell and generate profit. If you develop them in round 1, you'll start selling them in round 3 and round 4, when your market share and margins really matter. You will end up managing 8 products, 4 existing ones plus 4 new ones, 1 for each segment again: Thrift, Core, Nano, Elite. This doubles your product offering, improves market share, and positions you to dominate the simulation by round 4. R&amp winking and laughing. Decisions, positioning for ideal spots. Let's now work on research and amp development. When creating the 4 new products, place them directly into the ideal positions for their respective segments, based on Table 3 in the Industry Conditions Report, ICR, which shows drift rates and segment preferences. Yes, developing these products at ideal positions will take longer and cost more, but it's worth it. You meet customer demands perfectly, improve perceived value, and maximize sales. Also, update your existing products if they have drifted from the ideal specs. Especially in segments like Nano and Elite, the performance and size expectations shift significantly every year. Marketing, pricing, promotion and amp sales forecasting. Let's move to the marketing module. Pricing strategy: keep your prices at the high end of the acceptable range. For example, traditional, $24 Core, $30 Nano, $38 Elite, $42. Why high-end pricing? Because your products will be well positioned and supported with strong promotion and sales budgets, so you can command better margins. Promotion and amp sales budget: invest $2,000 each in promotion and sales per product. Yes, even for new products you're about to launch, plan ahead. This boosts awareness and accessibility, which directly increases your demand and market share. Sales forecasting: predict with precision. Next, we calculate the sales forecast, one of the most critical and tricky steps. Step by step: 1. Go to page 4 of the ICR and find the potential market share in units. 2. Multiply that number by the expected growth rate for each segment: O Thrift, 11%; O Core, 14%; O Nano, 16%; O Elite, 11%. 3. Input those values into an Excel forecast file. You can build your own or use a template. 4. Adjust slightly downward if you're unsure about demand. Remember, in round 1, you only have 4 sellable products, so match your forecast to those. But in rounds 3 to 4, when 4 more products are live, your forecasts will double. Production planning: capacity plus automation. Now move to production. First, check if any of your current products need extra capacity. For example, if your forecast says you need 1,000 units and you only have 700 units of capacity, invest to increase that. Second, when you add 4 new products, you'll need new capacity too. Tip: add around 500 units of capacity for each new product. Assign moderate automation levels. 5.0 for all products is a good baseline. Avoid going too high, over 8.0, as it reduces flexibility in future rounds. Make sure your total spending does not exceed the capital investment limit, usually $57 million in round 1. HR and TQM, set the foundation. Go to human resources next. Set recruiting spend to $5,000. Set training hours to 80. This maximizes productivity early on and reduces labor cost per unit over the next few rounds. Then move to TQM, total quality management. Allocate $1 million total in TQM for round 1. Choose 2 to 3 initiatives like channel support systems, concurrent engineering, vendor just in time. These reduce material and admin costs and improve product quality over time. Finance, fund wisely. To afford all these actions, you'll need capital. Use a balanced approach. Issue stock, $30, $40 million long-term debt, $15, $20 million short-term debt, $10, $15 million. Avoid emergency loans at all costs. They damage your credit rating and lower your balanced scorecard, which determines your final CompXM score. Keep a cash buffer of $10 to $15 million in your bank to avoid liquidity issues. Performance review, metrics that matter. Once you input all decisions, review the pro forma reports. Look at net profit. Aim for at least $10 to $12 million in round 1. Sales revenue, $180 to $200 million is a strong target. Contribution margin, aim for NGT, 30% in round 1, and improve to 35-40% plus by round 4. Check your stock price and earnings per share, EPS. If your numbers look good, you're on track for a top-tier final score. Summary, Round 1 Strategy Checklist. Here's a quick recap of what we did in Round 1. White heavy checkmark, mapped each product to its segment. White heavy checkmark, added 4 new products to double product lines. White heavy checkmark, positioned all products at segment ideal spots. White heavy checkmark, priced near the top of segment ranges. White heavy checkmark, used strong marketing budgets. White heavy checkmark, forecasted sales using market share plus growth. White heavy checkmark, increased capacity plus added automation wisely. White heavy checkmark, invested in HR and TQM early. White heavy checkmark, funded actions using stock and debt, avoided emergency loans. White heavy checkmark, reviewed estimated results and adjusted. This sets you up for massive growth in round 2 to 4. You'll dominate the market, improve your score, and potentially achieve 999 out of 1000 in CompXM. Need help? If you want free support for round 1 and round 2 of your CompXM, feel free to email mehelp2002@gmail.com. Also, check out our blog for step-by-step tools, forecast templates, and pricing models. Link https://compxmguide2022.blogspot.com. Stay tuned for the next video, where we'll walk through round 2 decisions, including how to scale production and optimize profit margins further. Thanks for watching, and I wish you great success in CompXM. Good luck and see you in the next round.